Today we are going to talk about Groww Value Fund. Let's first start understanding what is value, or what we call is as a value philosophy when we talk about value funds. Broadly, in across mutual fund schemes, different type of philosophies are used. We buy sometime growth companies, we buy sometime value-based companies. But in this fund, we focus or we are very sensitive to valuation. And that is what is the core of a value fund. Now, why we focus on valuation? When you buy an investment or when we buy a stock, there are various risks that are present inherently in that stock or in that company. So these are businesses risk, these are valuation risk, and these are business cycle risk. Generally, businesses are valued based on future cash flows. So we project them and then we discount them and create a valuation framework for every stock. Across the board, when we make an investment decision, we optimized for managing risk. And that is how we try to minimize the risk. We also manage it through sizing in the portfolio. However, in this fund, we become extra cautious towards valuation and we try to manage every risk based on valuation. So essentially, if I can say in one word, in this portfolio, generally we don't take valuation risk. And we are trying to ensure that whatever we are buying, based on projected earnings or estimates of profitability, cash flows of the company, that price has a margin of safety as compared to the valuation that we are arriving at. So this is what we call is a value fund for us, and this is our core philosophy. The fund is basically spread across market caps, but broadly it's more exposed towards larger cap as of now, because we find more value in large caps. For every value stock, there needs to be a trigger to unlock the value. And sometimes it is generally based on their earning profile changing so that they get re-rated over a period of time. Another is sentiment change across that sector or some individual changes happening in the company. That also unlocks the value. One of the objectives of investing in value funds is to minimize drawdowns. And hence we keep that in mind, that we are ensuring that the company will survive and company earnings and projected cash flows would be enough to justify the valuation. One very important characteristic of value funds is that sometimes they take time to perform. And given the situation of the market, where last 2-3 years performance has been very, very good and valuations are reasonably high. Hence, one important factor for this fund to be kept in mind is that you need to have a longer term time horizon. So 3 to 5 year time horizon is must for this fund. And this fund, because they are very, very attuned to one particular philosophy, which may not work for a certain period of time. So you need to be able to see underperformance for, let's say, 1 or 2 quarters, maybe even 3 quarters, and then only invest in this fund. So if you want market performance or market linked performance all the time, then maybe these funds are not suitable for you. So a longer term time horizon and a bit of underperformance over time is something that will happen in this fund. So for those investors who want comfortable products where volatility is less, drawdowns are less, but they have time horizon in their hand, those investors should only invest in these funds. Ideal time horizon, as I said, is 3 to 5 years. In terms of riskometer, this is a high risk product, and the best method to invest in these funds is through SIPs. You can invest in this fund directly through various platforms, online platforms, or through our website, or you can also consult your investment advisor for discussing about this fund. Thank you. That's all from my side.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.